My name is Abel from Mr. 8 Developments, and today we have come up with something completely new. This is going to be a series of very interesting videos about the Dubai real estate market. And we'll be having the legendary, the veteran of the Dubai real estate market, Dr. Anand, with us with lots of insights. So, Doctor, what is Market Updates with Mr. 8 all about? Can you tell us more about what we'll be discussing through these videos?
Okay. You see, Market Updates with Mr. 8 is not going to be just another podcast. It's going to be the voice of clarity that this market really requires. The market is very loud right now. Everybody's talking about launches, prices, returns, but very few are really trying to educate, to raise standards, and to create accountability and responsibility. This podcast changes that. In fact, this podcast will bridge three worlds: the investors, the salespeople and the brokers, and Dubai as a city. Now, for the investors, what they're going to get from these series is insight so that they are able to make the educated decisions. There's going to be no hype on these podcasts. When investors have to make informed decisions, this podcast is going to break down what's actually happening in the market, why it's even happening, and how they can take strategic decisions in one of the world's most dynamic real estate markets. Now, for the brokers and the salespeople, this platform is about elevation. Selling real estate shouldn't be about inventory and pressure. It should be about intelligence, timing, ethics, and trust. Now, this podcast is going to raise the bar. We're going to be sharing market intelligence. We'll talk about sales psychology. We'll talk about some of the best practices in the market, because we genuinely want brokers to be advisors rather than order takers.
So, Doctor, 2025 has been a phenomenal year, right? Now we're in 2026. Shall we look back at 2025 and go through the ground level numbers on how the market in Dubai performed?
Well, you're right. It has been an incredible year. In fact, we have shattered the records of every year before that going forward. To look at the numbers on the ground, if you look at actual cash transactions, cash sales, Dubai has registered 217,500 transactions.
That's crazy.
217,500 transactions with 686.8 billion. That is a 19% increase on 2024 in terms of volume of transactions, but a 31% increase in value. When you add the mortgages into that, because it is part of the real estate market, we're talking an additional 51,000 units with 179 billion. All in all, the market eventually closed. When you take leases, renewals, when you take rentals, all of them, Dubai registered 917 billion through 270,000 transactions. Now, that number is impressive, because when we're talking 917 billion, we have to put that into perspective. If you look at the Dubai Real Estate Strategy 2033, one of the goals of that plan was to sell 1 trillion real estate in 2033. In 2025, we have already hit 91.7% of that target. I believe this year is going to be our trillion year. Now, to really understand this number again and the pace at which this market is progressing, let's put that number into perspective. If you look at the IMF World Economic Outlook Report 2025, this number, 917 billion, is bigger than the GDP of 163 countries last year. That's 75% of the countries in the world. Their annual GDP was less than the performance of one industry in Dubai last year. That's where we are sitting right now on numbers.
As we see online, there's a lot of data that constantly is conflicting. We've got real estate companies posting huge numbers in sales. We have major reports reporting various figures. But most of the time, it's all confusing and it's conflicting. Doctor, can you structure and guide us through on what exactly are these numbers, and can you give us the perspective of what these numbers are actually trying to convey?
Yeah. You see, what happens is a lot of the posts that are coming out on social media is talking about the sales in Dubai. Now, the sales are typically cash transactions, even for ready homes. It includes even the few tokenized properties that were sold, and it also has all the off-plan on where people are buying. Those are considered the cash purchases, which come under sales.
Understood.
But you cannot ignore the market's performance on rents, on leasing, on renewals, on services for real estate. You cannot ignore mortgages. So when you put all of this together, that's when you get the real number on how the market performed. Otherwise, at best, you're operating with a number which is around 65 to 70% of the market. So it's good to see these reports, but we need to, and the data is very accurate that's coming out. For example, DXB Interact, Property Monitor are very good sources for this information, but they're very clear. They're talking about the sales in the market.
Correct.
They're not talking about the overall market performance. So we need to understand that we need to add information from the Dubai Rest app on mortgages, transactions, value of transactions, all of this. In fact, if you actually look at the number of transactions, we crossed 3.1 million transactions in the market last year. Now, that is every lease agreement. It is every tenant, every rental increase, every new rental agreement, all of these, the services and real estate. This is the performance of the industry. We cannot limit our industry only to the selling of an asset.
Understood.
What about facility management? What about community managements? These are all revenue generators for the real estate market. So that is why we need to look at the big picture to genuinely understand what's happening in the market.
So the Dubai real estate market has seen a lot of activity in new handovers and new launches constantly happening back to back. What do the numbers in regards to this speak about the real estate market?
Actually, the numbers are in a very healthy place right now. If you look at the actual handovers that happened, we've had 42,784 units handed over. That was a 45% increase on the number of handovers from the previous year, which is a very healthy sign that a lot of investors who put their money are now starting to see their units realized in the market. So that was a good space in terms of handovers. We've generally averaged between 30 to 32,000 units a year in the last 3 years. Yes, last year was 42,000. In terms of new launches, was absolutely amazing. It was a record-breaking year. We did 177,624 units, which was a 6.7% increase on the number, 6.1% increase on the number of launches from the previous year. Now, to put that number into perspective, that's an average of 670 units every single day in Dubai.
Wow.
It's like 2 to 3 buildings being launched every single day. These are being launched to prepare the market for the future requirements with the millions of people coming into the city. We have to launch those now to have ready homes in the next 3 to 4 years available.
Correct.
So we're sitting in a very healthy space, both in the handover market right now, as well as in the off-plan and the launches.
And how do you see and how do you compare it with the number of people actually moving to Dubai every single month or every single day?
All right. Okay. Typically, these numbers are calculated annually. Now, based on the Dubai economic agenda, we will be hitting 6 million by 2033. So we still have around 2 million people to come in. Last year, we had 208,000 people that actually came into the market, came into Dubai. Now, those 208,000 obviously cannot buy. Even 50% of them, let's say they cannot buy, they would move into renting or company accommodations. You still have about 104,000 people coming in every year who have the capacity to buy or who need a good home to rent. With an occupancy of 3 people to a house, which is the Dubai standard right now, we need 35,000 new homes every single year just for the new people coming into the market. And if you look going forward, we will have 3.8 million people coming by 2040. So from a 3.8 million people, again, if you use the same metric and remove 50%, you still have 1.9 million people coming in. And if 3 people occupy a house, we need 633,000 new homes just for the new people coming in. Forget the growth in the holiday homes. Forget those who are renting, who are looking to buy. Forget those people who are now in the market actually looking to buy ready homes as security investors. Even if you leave them out, just for the new people coming in, 633,000 homes in the next 43 years. That's 45,000 homes every year just for the new people. Holiday homes are on the rise. There is a 135% increase in holiday homes in the last 5 years, which is an average of 27% a year. We need between 7,000 to 8,000 new homes every single year just for new people coming in.
We need much more.
So we had 42,000 homes last year. Now we need 35,000 homes just for the new people who came last year, 8,000 homes just for the holiday home increase. You've already crossed your 42,000 homes that handed over last year.
There were multiple speculations in the market through various reports where they had predicted a big market crash or a price slump that's about to be happening last year. That was supposed to happen last year in 2025. But now it's very clear nothing of that sort happened and the market is positive. What do you have to say regarding all of this?
Yeah, I think this started last year in May, end of May, when
Correct.
the Fitch report came out.
Correct.
And the two things in the Fitch report that literally put a lot of people into panic was they anticipated 90,000 units to hand over last year, which would be a lot entering the market. And they estimated that prices would drop around 15% in the market. And a few of us did put out videos challenging that report. Now, to be in
You were one of the first.
I was the first actually, and then a few others came. Now, in defense of the reports, many of these are very good reports, but they do not look at all the criteria before they look at very specific criteria and then they voice based on that. So the speculations enter the market, and sometimes investors, salespeople do not actually check the reality on the ground and they start forwarding this to people, which was the reason why we came out and we challenged the reports and we gave hard data to show why it was not going to happen. When the year ended, it showed who was actually right. So we need to sometimes be careful about these reports. Let's look at two examples. The projection was prices would drop 15% in the market. If you look how we closed the year, in primary sales, the off-plan transactions, prices closed at 1,700 a square foot, which was a 6.7% increase in the prices. The secondary market closed at 1,500 a square foot, which was 11.2% increase on the prices. Now, you'll get this data from DXB Interact, Property Monitor. They all have that. So if you just look at those numbers, we averaged an 8.9% increase in the market last year.
Yes.
Now let's look at, Fitch said there would be a 15% drop in prices. So they went 15% minus and we went 8.9% plus. So the actual gap was 23.9%. So we were 24% ahead on the prediction. That's the reason why just going by a report doesn't work. You have to look at the reality on the ground. And like I mentioned in an earlier answer, we had only 42,000 units, 42,784 units that handed over. That was less than 50% of what was projected in that report, which said 90,000 units. And so there was no correction that came in the market. The projection is a 6% increase on rents this year because we were short of homes even last year. What handed over barely took care of the new people coming into the city, those who were renting and looking to own, those who wanted to buy ready real estate for long-term investments, found shortages in the market. So a report by itself might not necessarily be accurate. It is an indicator, but it doesn't look at everything because those reports don't factor the economic agendas, the population growth, the safety, the tax benefits, the migration, the millionaires relocating, business. They don't look at any of this.
Various real estate markets around the globe had a marginal year, and it was the complete opposite for Dubai. What do you have to say in regards to Dubai's growth and other countries' struggles?
All right. Okay. I probably will not be a person in a position of authority to comment on other countries, but I can clearly tell you what were the key drivers and why Dubai did well. Obviously, we have strong economic policies and government policies for attracting investments and foreign direct investments. We have incredible population growth coming in. We have new job creations in the market. We have the millionaire migration that's taking places. We are having relocation of businesses here. We've got the tax efficiencies. We've got safety. We've got the best healthcare, the best education, the best quality of life. We have opportunities with diversification of industries. So with a lot of these and with additional support, because economic policies are falling apart with a lot of the other countries, people are looking for cities where they can find stable economies, which are growth modeled economies. And they're naturally paying attention to Dubai because of this. So one, Our agendas are driving us on a strong growth track, but it gets further supported because the other cities are falling apart. So people are pushing all their money into Dubai. In the midst of all of this, while we are giving tax efficiencies, some of the best rental yields on the planet and quality of life, let's actually look at the price of entering such a market, because this is very important. People would be comparing prices to make sure that their asset has prime value. Now, I'm going to give you a comparison with numbers from some of the most popular cities that have done well in real estate. Now, this number that I'm going to be sharing is in square meters, while we tend to do things in square feet in Dubai. But this is going to be in square meters, and it's going to be in US dollars. Because when you want to take numbers to compare international markets, it has to be US dollars and it needs to become square meters. So if you actually look at a square meter, so I keep repeating this just so that anyone who's listening interprets this as a square meter price in US dollars. Right. So when you look at Tokyo, it is $13,000 for a square meter. Sydney comes in at $15,000. Then you have Paris coming in at $16,000 a square meter. You got London at $19,500. You got Singapore at $21,000 a square foot. New York is $20,000 a square foot. Hong Kong is $40,000 a square meter. In case I said foot anywhere, I mean meter, right? Dubai is $5,000 a square meter, which if we convert it comes to around 1,720 per square foot, which is currently the rate according to all our local reports. So where is $5,000 a square meter compared to $20,000, $21,000, $19,000, and $40,000 a square meter? Spanking new city, excellent infrastructure, great lifestyle, benefits, safety, and all at a price that is 1/5 some cities or 1/3 of the other cities. Dubai doesn't even need to sell itself anymore. That's the reason why we did in real estate more than the GDP of 163 countries last year. Let's just look at another number just to show you the proof of what's happening. In 2020, just after the COVID, we had cash transaction. Now, this is not the whole market, cash transactions, because we had the off-plan emerging again. We had cash transactions of 34,700 units. Last year, we closed at 215,700 units. That's a 622% increase in the last 6 years.
Now, how soon do you think we will bridge the gap from $5,000
a square meter
to the average of other
See, I believe,
real estate markets?
Again, there is no indicator on that, but I think it's going to take us a good 15 to 20 years to catch up, because we're talking of prices not doubling, tripling, increasing 5 times. Because bear in mind, all that time, those cities are going to continue to increase as well because of scarcity of land, no place for further development. So premiums will get put on those as well. But yes, we are increasing. The problem comes in when someone comes into Dubai today, they expect the opportunity of 2026 at the prices of 2020. That is not going to happen. In fact, I tell them that's exactly why you should get into the market. You have seen a 622% scale up in the last 6 years. You know what's going to happen over the next few years. So get in now.
So, Doctor, what segments actually led to the activity in 2025?
Actually, that's a very good question to ask. And in fact, that's what makes the market exciting. We don't see any single market, any single segment dominating now. We are actually seeing off-plan at 56%. So they're the one that's dominating a little bit. And the reason it's happening is people are being attracted by flexible payment plans and very attractive capital appreciation potential. But we're also seeing that a lot of the secondaries working in terms of apartments taking up a big chunk. Roughly 86% of the market.
Yes.
That's coming in the mid segment of the market. Then you've got the townhouses and villas taking up about 14%. Townhouses are around 8.7% and the villas are around 5.3%. That is coming up in the family-oriented communities and the luxury segments. We're now seeing plots and commercial showing very strong growth because of the economic policies, business relocation, 70,800 companies registered in Dubai last year. So there's need for office spaces also going forward. And there is no clear price niche also because since everything is moving, people are coming in at lower entries, mid market positions, luxury, and even ultra luxury. If you look at last year and the split between the off plans, the primary and the primary did 149,000 units, secondary did 117,000 units. Revenue wise, we are looking at 448 billion that happened in the primary, which was a 33.6% increase over 2024. And we had the secondary markets, both the cash purchases in there and the mortgages, at 418 billion, 26.2%. So there is no clear standout in the market, which is a very healthy sign that the market is in a strong place and we are not dependent like only on investors coming in or only on ready homes being sold. Everything is having the demand.
In regards to global investors and home buyers here in Dubai, who were the nationalities that actually was driving the majority of the transactions?
All right. We actually have almost the whole world buying in us with us now. But what's absolutely amazing was the top 5 nationalities and what they did. Right at the top are the Indians, who are doing 22% of the transactions in the market.
As always.
Yeah, the second is UK, who's doing 18% of the market. So between number 1 and number 2 is 40% of the whole market. That's 40% of 917 billion being done by them. Number 3 is Saudi Arabia at 11%. Number 4 is China at 10%. And number 5 is Russia at 9%. So if you look at the top 5 nationalities, 70% of the market has been driven by these 5 nationalities, both in the primary as well as in the secondary markets.
Doctor, how do you compare the profile of buyers in 2025 in comparison to all the years before that? Has something changed?
Oh, yes. I think we're seeing the personality of buyers has changed completely. What we're seeing now is more dominance from long-term buyers. People who are coming in, who are buying because they want to live here, they want to bring their businesses here, and they are picking up multiple assets. So these are people who are bringing a lot of FDI, foreign direct investments, into our city. And also these people are bringing the percentage of the foreign buyers has seen a dramatic increase, as well as first-time home buyers, which is showing good confidence in the international investors. So international investors are on the rise. We're now seeing family funds coming in here, institutional buyers who were never here 4 years ago. So we're seeing now steady long-term players. So the Dubai market is shifting drastically. It's no more about hot cash coming in looking at quick returns. It's more about global money looking and choosing Dubai to become a base.
What do you think that we can learn from Dubai's resilience through all of this global uncertainty?
Well, you're right. Last year was a difficult year. We had a lot of political hardballs being played around the planet. We had threats of potential global wars happening. We've had tariffs being slapped on everybody around the world. We've had economic turmoil and slow growth economies. And a lot of this actually puts pressure on investments. So people were looking for safe places, and Dubai won in these cases. One of the reasons is, one of the lessons the world can learn here is, we see policy stabilities will always beat market timing. And so Dubai was consistent in its policy developments, in the opening up of multiple visa categories, adding new laws which are actually supporting property ownership, economic developments, creating the ecosystem. So these policies started to drive foreign direct investment and more people into our countries. Then population growth has to be the big game here. We can see a lot of people moving into Dubai right now. So new job creation, migration of people, business relocations. What this does to the market is it gives strong rental performances. It gives higher absorption of units available in the market, and it eliminates or minimizes the risks of oversupply in the market. That's because the economic policies and the population growth has taken care of that. The third thing is a very interesting blend of higher yields and quality lifestyle. That's a very powerful combination. 6 to 8% annual yields is among the best in the world. And not to forget, there's tax efficiencies. These are tax-free. You're giving quality of life in world-class communities, and therefore, with new businesses relocating in here, huge demand for commercial, residential, and retail spaces. So yields are at a premium, and luxury lifestyle is on the rise. And I think the fourth thing I would just say in here is dominance, where across multiple segments in real estate, we are not relying on one particular market. Most of the West is relying heavily on a ready home market and mortgage-driven buying. We have ready home markets with mortgages. We have off-plan launches with investors on cash. We're now experimenting with tokenization. So you're going to see a lot of new, literally like a real estate 2.0 showing up for us in the years to come.
Now that we've covered the past, let's look at the immediate future. What can buyers, homeowners, and most importantly, investors look forward to in 2026 and the years to come?
Abel, for that answer, you're going to have to watch the next episode.
For sure, Doctor. This session was absolutely informative. And we're going to have multiple sessions just like this with Dr. Anand on a weekly basis. If you enjoyed this podcast, feel free to come back again on our channel to learn more. We are Mr. 8, and we are working alongside Dubai to build Dubai's future. My name is Abel, and thank you for watching.